stocks on the editor's radar. Today we're discussing the metal space as well as AU Small Finance. Let's begin by talking about metals because clearly we have seen that underperformance take place within the space. There's a lot of factors, Nikunj, that have attributed to it, but can we see a turn in the tide?
Not for all metal stocks, Avanne. I'll tell you why. Because so far the beginning of the year, the positioning was that China will open up, metal demands will come back. I guess now the realization has kicked in that look, everything which is solely connected to the Chinese demand may not do equally well. I think metal stocks in my book as a category may not be the outperformers in 2023. However, selectively there are some steel stocks which you may want to look at, and largely because coal prices have come down, and incrementally that's a big positive for some of the metal companies. Look at domestic companies and look at companies which essentially are supplying to the domestic market, because a weak dollar means they would have an advantage, and the advantage largely lies to the fact that in India metal prices are global denominated. So currency is on your side and international coal prices have come down. So it's going to be a double advantage for some of the steel companies. And the steel cycle also globally is not reversed, unlike what we've seen, let's say, in something like copper. So a lot of the metal stocks globally, I guess, have a readjustment which should happen largely because of the Chinese demand not opening up.
All right, so that's the readjustment that we're expecting, but it won't be across the board when it comes to metals. Let's move aside then and talk about another mover, and that is AU Small Finance Bank. Now, it's interesting because in the last 15 days, we've seen two downgrades come in. Citi is the latest one. They've got a target price at 725. They've downgraded the stock to neutral. And you've had Chris Wood as well flagging off this very same stock in his portfolio.
Look, this stock has done exceptionally well. And there was an overhang that what will happen to Sanjay's reappointment, and Sanjay Agrawal got reappointed for 3 years. The result reaction or the stock reaction was immediate. It went up 20% the very next day. It's up 30% after that RBI ka hara jhandi, that reappointment approval by Reserve Bank of India. Now, AU Bank, I think, is a brilliant franchise. But a brilliant franchise which after the run-up is actually available at fair to expensive price at the current juncture. The construct for AU is that it will continue to grow in the range of about 20% plus because the base is low, and ROA would be anywhere between 1.8 to about 1.7 or 1.9. That's the guidance from the management. When you're buying a stock which is giving you that kind of a combination of 20% growth with a ROA of about 1.8 to 2% and ROE of about 15 to 16%, 3-time price to book is what markets historically have given such a franchise. Right now it's 3 plus. So it's the recent run-up which in a sense is just making the stock look slightly bulky. So the stock will have to lose some fat. It has to go on the treadmill, muscle up, maybe time-wise correction, or maybe 2 quarters of earnings.
Okay, there you have it. So that's AU Small Finance, Aisha, as well as the metals basket.